Probably my biggest regret in real estate is never buy unentitled land.
What is one mistake you made, maybe early on in your career, or it could be even recently, but that you wish you would have known sooner so that you could take it back and make some changes?
Probably my biggest regret in real estate is never buy unentitled land. Always structure your purchase and sale agreement where you close right before pulling your construction loan. Doing so creates a lot of risk and challenges that I've had to work through.
Hey everybody, welcome back to another episode of Wealth Unfiltered. I'm your host, Samantha Parinello, and today I have the pleasure of welcoming the newest member of Viking Capital. We have the very first president, and his name is Alex Gill. Welcome to the show.
Thank you, Samantha. I appreciate the warm welcome, and I'm thrilled to step into the role of president of Viking Capital.
Amazing. Well, we're very excited to have you on board. We've been looking forward to bringing somebody to really lead the troops as Viking continues to grow. So we're happy to have you on board here. So one of the things that I want to do is introduce a little bit about your background and let our listeners know who you are. So you have led over $1.5 billion in multifamily projects through several cycles. But let's go before that started and really understand what got you into multifamily to begin with.
Well, I guess it all starts back when I was graduating college. I really liked tangible assets, so I was attracted to construction. So my first job out of college was an assistant project manager on the Indiana Temple of the Forbidden Eye ride at Disneyland. So the Imagineers built a model of the ride in a bowling alley offsite. We'd go there and study it every week and figure out how to build it. So creating something from nothing has a lot of passion for me. And multifamily was just a great place to create communities for people. I've had a 20-plus year career in multifamily, getting my start at Trammell Crow Residential, one of the founding partners at Mill Creek Residential when we spun off in 2010 in the GFC. And then I worked at Holland and most recently Related, and actually started my own shop, Waterman Residential, a few years ago, and had been focused on value add and core plus investing in the Sunbelt.
Amazing. Well, with all of that experience that you have, what keeps you going in multifamily?
I just love the multifamily industry. It's a passion of mine. I like creating places for people to live. It's an essential need for people to have housing. So being able to develop and acquire properties and add value to them through renovations and operational improvements, is really exciting for me.
Well, that's amazing. Well, Viking will be a very good fit for you. So when you look back, you've gone through, like you're mentioning, several cycles within the multifamily real estate ecosystem, right? So you've gone through the ups, the downs, the hard times and the good times. So when you look back at your experience, how has what you've been through shaped your philosophy moving forward?
So I got my start in the industry in the early 90s during the savings and loan crisis. So starting out industry as a broker, kind of seeing the fire sales and the stress out there. So not having been invested in the market, I didn't feel the pain, but I got to see others experience it. So that was my start. And then, I experienced the dot-com and then the great financial crisis. I just made partner at Trammell Crow right before the financial crisis and got to learn what it means to share in the profit and loss of a venture. So that was definitely a PhD in kind of working through some tough times, but we did work through the portfolio and paid back our investors and paid back our debt and, made a few dollars. It also created the opportunity to spin off into Mill Creek. We founded a new company with a new balance sheet. So we're able to kind of take our track record at Trammell Crow, apply it to Mill Creek, and grow it to being one of the top 5 multifamily developers and investors in the country.
Do you feel like the investor sentiment is high, or do you think that right now there's a lot of people running scared? Where do you feel like that momentum is right now?
I think there's a lot of dry powder on the sidelines. The institutions are kind of getting back into the market, but they're being cautious and they're looking for the right opportunities. The investors I talk to are looking for a core plus asset with value add returns. So we just need to be more diligent in our underwriting and find the right opportunities.
Absolutely. So when you talk about, financing, right now, there has been, I would say probably the last 2 years, it's been pretty difficult for pencils to work. And I think one thing that, listeners, investors want to know is as you see 2026 coming and, we had one rate drop, there's potentially more coming. How do you feel like the investment dynamic is shifting?
Well, I think it's setting up to be one of the best times to invest in multifamily since the GFC. So there's price discovery. So I think sellers' expectation is meeting market. So deals will be done. Financing is normalizing right now. Rates have come down a bit and looking forward to them coming down next year. And, developers and investors that started projects in 2021, 2022, may have to realize some pain and sell it at a loss or below their replacement cost amount. So I think there's just great buying opportunities for a well-capitalized company with a good strategy to focus on these types of investment.
Absolutely. And when you think about those companies and where you have to meet them, how has your underwriting changed, or what are the fundamentals that you're looking at in order to get a deal done?
So what I learned from my time at Trammell Crow is, buying good property. If you have a good location and a great property, you're typically pretty insulated from tough times. You can kind of work through it. So, my focus with Viking will be focusing on, A, B plus locations, good real estate, typically newer construction, and looking at older construction in A locations that may be a covered land pay for redevelopment, but always looking for opportunities to create value.
And how have your previous relationships, how do you feel like those will come into play in order for you to really get some extra deals done this year?
I've got, as I mentioned, a 20-year track record. So I know a lot of brokers, I know a lot of lenders and financial partners. So the deal flow tends to come in from those sources. I'm looking at off-market deals, a special situation, a distressed note sale, or some sort of distress where we know we're getting a good buy. So leveraging my 20-year relationships to find new deals.
Absolutely. And are there certain indicators for you that you're looking at for 2026 that might be a little bit different than what you saw in the last couple of years?
I think things are just setting up for some good times. The market is adjusting. Buyers and sellers are coming together with pricing discovery. I think it's a good time to buy good real estate in good locations.
I want to know a little bit more about you because I'm, as much as I should know probably more about the companies that you've worked for, I don't. And so, obviously Viking has been pretty much just the Sun Belt. So as far as your experience goes, do you feel like the Sun Belt is still as strong as it was, or would you venture into some other areas and regions of the US as well?
I've been focusing on the Sun Belt because there's strong population growth. Most of the states in the Sun Belt are landlord friendly and business friendly states. That's a place you want to do business. There's job creation. So people are moving there. So markets like Texas are seeing substantial population growth. Florida's seeing population growth. The overall market fundamentals look strong. So, I'd target Texas and Florida, the Carolinas, Atlanta, all strong markets. Phoenix on the other side of the country, I think is a strong market. There's a lot of supply coming online right now, but it's being digested, and I think that market will improve significantly in the long term.
Amazing. And do you feel like that goes for, value add and core plus and new builds, or do you think there are primary asset classes that will do better right now in those markets?
So I kind of think the philosophy is buy where you build. If
Okay.
the market's good enough to develop a new community, that's where you want to buy. You could draft off the Class A rents of a brand new community, come in with a value option, maybe $150 below the new product. So it kind of justifies the whole value add strategy and the rent growth strategy. But, it's good to draft off the brand new stuff.
I love that. Well, and one of the major things that I know that Viking, we really pride ourselves on is working and having economies of scale. So what you're talking about, I think absolutely goes into that philosophy of ensuring that there is an exit strategy that could potentially be multiple assets, also the ability to manage your assets better and have more feet on the ground, as they say. When we talk a little bit, like shifting gears just a little bit, I know that your background also is pretty heavy in asset management and knowing how to run an operation and keep that tight. When you look at our portfolio and you come in and you're assessing how we're doing and how you're going to, make things even better for Viking Capital, what are some of the fundamentals that you're looking at to ensure that we are delivering absolutely top-notch asset management?
So I think transparency is at the front and foremost being most important. So we need to have strong asset management. We need to be on top of the assets on a weekly basis, making decisions and creating a dashboard to report to the executive team on a monthly basis. So we always know where we stand. But operational efficiency really creates a lot of value for Viking, and that's where I'm going to focus my time.
Are you looking to build sustainable wealth and achieve financial freedom? Viking Capital can help you do just that through multifamily investing. With a team of seasoned real estate experts, Viking Capital conducts deep financial analysis and data-driven asset management to deliver outstanding returns. Their strategy focuses on low-risk opportunities with significant value-add potential, preserving your capital while maximizing long-term growth. Join them and be part of a success story. Viking Capital has acquired 30 properties and manages over 6,000 units, all thanks to their dedicated team and valued investors. Discover their current deal offerings at vikingmultifamily.com and start your journey to financial freedom today.
So when you came in, it's only been a couple of weeks. So we're kind of throwing you into the fire, as you will, with all of the things that we have going on here, including having you in 2 podcasts back to back with us. But one thing that, I would love to know a little bit more about with you and your philosophy is, where do you see the dynamics with the investors? So we obviously have a retail base and you're used to working with institutional size investors. Where do you see the marrying of that happening, and what is the potential for that?
So with institutional investors, they've got pretty stringent processes and requirements. So I'll bring institutional quality financial reporting and oversight to the retail investors. So they'll just get a higher level transparency.
Yeah, I love that. One thing that you don't know about me yet is that I am an operations guru. That is absolutely up my alley. So when I heard that you were going to bring institutional reporting to the company, I was very, very excited. I love the idea that people will have everything in front of them and that it's less about them having to come to us for questions, and it's really more about how can we continue to evolve and grow? And you're doing that for us. So I think it's a really exciting part of what Viking has going on here. So I want to talk a little bit more now about 2026 and where you see the market evolving. So we have right now some lingering tariff concerns. We have obviously the unknown of what's going on with our interest rates going to drop. But how do you see that evolving as far as cap rates go, or what people can expect for, pricing to come down?
Well, I'm seeing cap rates start to compress. They are coming down. Kind of my target cap rate for an acquisition is somewhere in the 5 and 5.25 range in the good markets. I'm seeing trades, sub 5 caps right now. So we're starting to see some movement right there. So values are increasing. So I think we hit the bottom of the cycle. We're coming out of it now. It's a great time to buy and ride it back up. And the fundamentals are great. There's a lot of supplies hit the market the past couple of years. We'll be digesting that. There's not a lot of starts in 2026. So it'll just create some tailwinds on rent growth and burning off concessions and just overall property performance.
So for people, who haven't really indulged in development deals yet, it's been maybe more of just acquisition, or they're not quite sure about new development and how they should become a part of it. What is something that you could, maybe explain, a myth maybe you could even bust about development risk or how it works, just to kind of let people know a little bit more, since that's been your focus for so long?
So I think you can achieve outsized returns with development projects, but you have to be patient because the development process takes a long time. And I've worked on deals when I was in California that took me 6 years from the time I put it under contract to the time I delivered and actually sold it. So it takes patient money, but there are outside returns. Example, a property that I developed in California, I sold it during the crazy times of COVID at a 3.25 cap, making the investors $55 million profit. So
Oh my
there's
goodness.
substantial upside in development if you time it right.
Absolutely. Well, and what you're saying right now for market timing and development, like you were mentioning, crazy absorption happening, but the supply chain is definitely slowing down. So where do you see development and what is like the most opportune time for people who want to get involved?
So the challenge with the development right now is getting joint venture equity into the deal.
Mhm.
A lot of investors are just kind of sitting on the sideline and kind of wait to see what happens with tariffs and interest rates and construction costs. There's a lot of factors that come into play that kind of make a development feasible. So trying to get some clarity of what's happening with these external factors. I think once things stabilize in 2026, I think the development market will return. But 2024, 2025 has been very slow in development.
Right. Do you think that we'll get to another point where we'll be like just needing development again? Or do you think everything's going to kind of even out now that we still have so much coming online from when it was so robust?
So we have a 4.7 million units short of what's needed for the demand. So there will be ongoing demand for rental development of rental housing. And I think that also creates opportunity for value add housing as, people need a place to live and there's pent up demand.
I know that one of the pieces, a variable that I've heard a lot about is the affordability crisis, so the housing that is more affordable. How do you think that that will take place in 2026, or how do you think that will be impacted?
I think single family homes are still going to be unattainable for the average family. So that's going to create a lot of demand for rental housing. Rents have been pretty stagnant the past couple of years, but they're still, a considerable amount of people's incomes. So, you know, getting back to targeting locations with good job growth and good incomes, I think those are the types of properties that will outperform in the long run.
So I'm going to change gears just a little bit. So what I'd like to know from you is I have heard, just to get a little bit personal, that you're an avid waterman, and that is why you actually named your company that. And I'd love for you to kind of tell us about, you had like a very strenuous, like really exciting milestone that you hit recently, correct?
Yes.
Tell me about it.
Okay. Well, yeah, I am a lifelong waterman. Grew up in California at the coast. Spent all my free time surfing, and when I graduated from college, I spent a year traveling Indonesia and Australia on a surf trip. So that's a passion. And then in real estate, I sneak away for 2 weeks at a time to go out to very tropical places. But one of the big accomplishments was completing the Catalina Classic, which is a 32-mile race from Catalina Island to Manhattan Beach Pier. I did that a number of years ago. That was a big accomplishment. All the surfers in the South Bay where I grew up would all compete as a way to stay in shape in the summertime to be ready for the big waves of winter. So that was something that I constantly did. I still paddle. I'll do 10 miles here and there. But yeah, I did the 32 miles at one point.
How long does 32 miles take somebody?
It took me about 7 hours.
Oh my goodness. I can't even imagine. That was very hard.
I had a boat following me, giving me sports drinks to keep me going, but yeah, made it work.
Wow, that's incredible. So was that something that you had wanted to do for a very long time and you had to work up to, or was it something you were like, well, I do this enough that I'm gonna give it a shot?
I trained all summer for it, but it's kind of something I just wanted to do. I went out and bought a paddle board and started working out with some friends every morning, and it was just part of my routine, and it was great.
That's incredible. Well, I want to finish up by asking you just a couple more questions. When you look at your career and everything that you've been doing, I'm sure there are the good and the bad that have come with it. So the first question I have for you is, what is one mistake you made, maybe early on in your career, or it could be even recently, but that you wish you would have known sooner so that you could take it back and make some changes?
Probably my biggest regret in real estate is never buy unentitled land. Always structure your purchase and sale agreement where you close right before pulling your construction loan. Doing so creates a lot of risk and challenges that I've had to work through.
Okay, very good. And on the flip side, I'd love a piece of advice for let's say 2026 investors who, are looking to get into multifamily?
So once again, it's a great time to invest in multifamily. There's going to be tailwinds in the overall industry. Don't pay attention to the headlines right now. There's always good news and bad news out there. People react to it. Look at the long-term market fundamentals, population growth and job growth and all the good things that are happening, and just invest long-term and be patient, and things will definitely get better in the next couple of years.
Amazing. Well, I just wanted to thank you very much for your time today. I know you are a very, very busy man. So thank you for joining us.
Thank you very much.
Absolutely. And thank you to our listeners for joining again today. And we appreciate you liking and following us for more. Thank you for tuning into this episode. We truly appreciate your support. Don't forget to subscribe, leave us a review, and share the podcast with your friends. Until next time.